All right, guys, this is Eli from Urban Lifestyle. Today we have another special guest on the Urban Lifestyle Show. Mr. James, how's everything going?
Going well. How are you doing?
I'm doing fantastic. Now, for those of you who don't know, James is a SD Bullion representative. James, you want to tell them a little bit about yourself?
Sure. I've been working in the high volume bullion precious metals industry for just over 10 years now. I've been investing in precious metals before the financial crisis of 2008. So I've just been in this game for a long time. And I was doing, I've been watching your channel a little bit of late. I've been loving the creativity that you've been putting out there. And I reached out to you about possibly coming on and just talking about a couple of things I've been writing about over at SD Bullion. So I guess that's what's brought this interview on today.
Awesome. Now, today's topic, we're going to be talking about silver price at its highest, correct?
Yeah. We're going to do a quick look back just because silver prices have been getting pretty bullish of late, and you could feel the sentiment starting to change a little bit. And it's not as depressed, let's say, as it's been the last few years, which is a good opportunity for people who like to buy low and maybe eventually sell some high. But right now we're starting to get that bullish sentiment. So I wanted to just write a little blog and show some charts and some data looking backwards, because if you ask someone on the street, for instance, or just even someone who invests in silver, like what's the highest price silver ever reached in fiat US dollars, they'll probably tell you 2011 or 1980. And it's a little bit more nuanced than that. You need to start looking back in terms of all the real price inflation that's happened since 1980 and all the real price inflation that's happened since 2011 to kind of garner a sense of what those price highs respectively are worth in today's fiat US dollars. And you have to start looking at, well, the government, they have motive to lie to you about the inflation rate every year because they have the highest debt of all time in history. And then they also have these pension funds and all these liabilities that are off the books that they've promised to pay and legally are supposed to pay. So, they don't want to default on those promises, but they kind of do in terms of defaulting on the devaluation of the dollar in terms of its purchasing power. And so they partially default every year. If you look at the data, about 6 to 7% inflation is happening that goes underreported. And so if you just do the 6 or 7% compounding decade after decade, and it's been that way for since the mid 1990s, you can eat away a ton of debt that you owe or promises that you've made. You can ease out easily half of them at least in terms of what you promised. So it was just looking back in time and seeing, all right, well, which price high was higher? And obviously $50 price high in 1980, that's almost 4 decades ago now. That is a lot more money in today's fiat dollars than it was then. If you use the government's own Bureau of Labor Statistics, where they use the really accurate inflation measures up till about 1980, and then after that episode where the U.S. dollar had real trouble after going fully fiat in 1971, essentially gold got so expensive we were able to actually go back on the gold standard for a year or two here in the United States. That's how much the supposed gold reserves of the United States were worth compared to the amount of currency that was outstanding. We could have literally gone back on the gold standard for a couple of years. Well, I'm sure that scared the bejesus out of the government, and they, looking forward, were like, well, we got demographic troubles coming up with these baby boomers. We're going to have to start coming up with a new measure of consumer price indexing and come up with a new measure for inflation. And we're not going to take in all this hard data and be too accurate with it. We're going to start weaseling our way out of this. And it got worse and worse progressively, and since the mid-90s, it's gotten even worse. There's a guy, his name's John Williams over at shadowstats.com. He runs an incredible website because he does all this data and inputting and gives us a clear picture of what the real inflation rate is. There's another gentleman who runs a thing called the Chapwood Index, chapwoodindex.com. You can look that up as well. Both those are regularly used in this industry to really understand how badly the currency's been debased. And I have a quote here just kind of for your listeners, just so they can kind of understand. People talk about Warren Buffett and what an incredible investor he is. And, he bought his first stock when he was 11 years old. He's now an 89-year-old man. On paper, he's worth like $82.5 billion. He has this holding company called Berkshire Hathaway. In the late 90s, he was a silver bug. He bought him via Berkshire Hathaway. They bought almost 130 million ounces of silver in the late 90s. So I did a blog on that too. So just look up Warren Buffett silver if you want to learn about that episode. But Warren Buffett's very wealthy and he's very respected and he talks a lot. What he does is he uses compounding interest. He buys companies and holds on to them. He basically argues that if I buy a company, I want to have it for life. It's that good of a company. He buys companies that have limited competition, who have moats around their business model, meaning they're essentially almost a cabal. They basically don't have much competition. He likes monopolies. And so he's made a lot of money and he's basically earned about 99% of that 80 some odd billion after his 50th birthday. And that's the power of compounding interest. Essentially, you can, compounding interest gets stronger as time goes on. The longer it goes on, it becomes, Albert Einstein basically called it the eighth wonder of the world. And those who understand it, they earn money. And those who don't, they pay it. And the people who don't understand compound interest in the reverse process in terms of inflation are the masses. We know underneath we have a sentiment, we get it that we're getting screwed, but it's hard for us to point when we have all these people telling us we don't have inflation. When the president today tweeted no inflation, well, that's a freaking lie. And it's absolutely been a lie for decades. And so that's why I wanted to come on here so we could just get a better sense of silver price size and what the potential is in the future if we just simply look backward to see where we were.
Okay. Yeah, because you brought up a point where you're talking about we really can't calculate inflation.
Yeah.
Yeah, because I released a video and I said something like that, and I was like, the price of $35 back in the 80s when silver prices were at its highest, I was like, just $35 back then is actually $117 today in the inflation chart that that's given.
Yes, that the government will tell you, right? And that's
exactly
that's like a fraction of the truth.
Exactly. And he somebody commented on my videos was like, yeah, it makes sense, but you really can't go based off that because his dad back in the 1980s was renting out an apartment for like around $200. Right now is $1,019. So you really can't factor it like that. And it made sense. It made sense, and you did touch up on that.
Yeah, it's sometimes it's apples and oranges because technology changes, right? In 1980, the ability for us to create clothing in the volume that we create it now, the volume of clothes that are made now is just cheaper. We just get better, more productive at certain things, like cars, for instance. The ability to build cars is much cheaper now than it was back then. And so if you look at a car-to-car price comparison, it's just not going to be an apples-to-apples comparison. You're talking about technology and economies of scale. Now that we basically have double the population almost now that we did back then. And so it's just a lot more people who can contribute to the economy and a lot more leverage in terms of making things at cheaper prices. So what we usually use as gauges has always been precious things that are limited in quantity, and that's why people essentially save gold and silver, because they know you can't just print the stuff out of thin air, and you have to work hard to get it, and there's limited supplies of it, and it basically gets numerated in this fiat currencies that we're talking about now. And eventually you can lie for a long time about your inflation data, but at some point in history typically shows this. At some point, the masses finally awaken and they're like, oh, I don't want to have this for anything. I don't want to have it because it's burning in my pocket. I need it out of here now. And so think about the terms of like what's happened today. We have Donald Trump tweeting this morning saying we got to take interest rates. Not only the Fed had to go to zero, they should probably go less. We probably should go to negative interest rates. Now, imagine telling people, keep your currency in a bank there, and you're going to have to pay to do that. So you have to keep the currency in the bank and pay it for the privilege of them holding your currency. And it's risky because there's supranational laws saying that we can bail in these banks if they go wrong. And so if you're sitting at, say, a JP Morgan or Citigroup or one of these massive commercial banks where we don't know really what's on their books and whether or not they're truly solvent on a mark-to-market basis, well, that's the risk you get to run. Now, go find the FDIC if they get bailed in and see if you can get your money back, or maybe you'll get some new stock shares in the new company, whatever they create 10 years down the line or whatever. So all the risk is just given to the average people who still don't understand that they've been, well, they do, but they maybe don't fully understand to the extent they're being lied to and they're being abused essentially. And so at some point, the crowd is just going to revolt. They're going to be like, get me out of these dollars, and I got to buy whatever it takes. And when you get to that point, when you get to a situation where the masses need out of any currency, that's where you get really high chances of high inflation or, God forbid, hyperinflation. And that is the last thing I think anybody really wants to see.
Mm-hmm. That makes sense. Makes sense. Now, based on everything you said, where do you believe the price of silver is going? Based off the
Now,
the current
sure.
records, the way things are looking right now.
Sure. I have a few different indicators that I've used, and I've done a couple videos on what I think is perhaps a fair market price for silver. Very hard to gauge because silver
No, of
only
course.
occasionally gets to break out, and it's broken out. In 1980, it obviously got into someone I would argue probably overvalued.
Mm-hmm.
$50 in 1980 is pretty high.
Mm-hmm.
And if you look at 2011, I still think $50 in 2011 it's not still. I don't think that was that overvalued, and I don't think that was a bubble at all yet. We
Mm-hmm.
were headed that way, but it obviously reverted. But when I look out in the future, there's a couple tools I've used. And I've actually done a video or two on Silver Doctor's YouTube channel called "When's the Best Time to Sell Silver?"
Mm-hmm.
And I use kind of an east versus west pricing data spectrum, and
Mm-hmm.
it gives you a sense as to how derivatives can press and suppress prices of commodities. And silver is the most obvious of all these. Gold is pretty obvious too, but silver is typically the one that is most tossed around by derivatives. It's just not really the true free market price. If we were using a free market price discovery mechanism like physical supply and demand, there's just a lot of derivatives that suppress the price.
Mm-hmm.
Really, right now, I think the Eastern price is running around $90 an ounce. And if you look at that chart that I show in the video, it shows that occasionally the Western price jacks back up toward the Eastern price, and they meet and converge. So, I think a fair price for silver is anywhere from above $50 up to like $90. I think is a pretty fair price. If you had a huge position of silver and you had made some gains, it may make sense at those price levels today to be selling a little bit and moving into other asset classes. But I do have the expectation that we're going to overshoot that and probably go to triple digit silver at some point. I don't know exactly when that's going to happen, but it will happen in the current fiat currency that we're using, the US dollar.
Gotcha. Now it makes sense because the way silver stackers, the way they talk, especially when it comes with silver, is like, hey, silver tends to go down when the economy is up, and when the economy is down, silver tends to go up. So a lot of people, they might see us talking and saying that, hey, we want a recession. It's not something that I feel that we don't want that to happen whatsoever. No. I just feel like we're looking at what's been going on and the track that the economy is in right now. Hey, what you say about that?
Yeah, I just look around and I'm trying to figure out where the best value is historically and long term. And I start looking at commodities and I start looking at historic prices versus past prices. And I also look at all the inputs in terms of other numeraires, other fiat currencies out there, all the risks that are associated with the financial system right now. And the downside potential of silver at buying it in the high teens per ounce right now in fiat US dollars is very limited, I think, compared to the potential upside. And so for me, the whole risk reward profile of it is very, very good. It's actually, in my opinion, the most exceptional thing right now. That may change down the line if the price goes higher. There may be other places to be looking at, but right now, I just think in terms of the risk reward profile of it is just so appealing. And so, talk to me when we get to 40 and we'll see how the world looks. But right now, I think silver is still a really good purchase for the long term.
Okay. Speaking of the price point, everyone that watches this channel, they know my price point is around $20. As far as generic go. Now, if I am going to be buying silver over 20, I feel like, hey, it has to be something of value. What is your cutoff point, if you have one?
That's a good question. I basically reached that level at this point. I mean, in the last year or so, I've pretty much acquired my position that I think I'm ready to have. And so now, as we move forward, unless the U.S. dollars under the potentiality, like for instance, I'm getting paid in U.S. dollars. The U.S. dollars are much stronger right now versus other emerging market currencies. At the moment, I think holding some U.S. dollars in terms of cash and physical cash notes in case there's a real problem, or as well just potentially to buy something else down the line, saving some cash to have that opportunity to do it, and those dollars makes sense. Obviously, I treat bullion essentially as cash. I mean, you're like one step away from being able to buy something with bullion. So those are I'm basically trying to raise those, and I'm also looking for opportunities. And as I look out, I'm thinking commodities, the price of high-end commodities like things that people eat or want to eat to stay healthy in the next decade or two, those will stay relatively high, and the people who produce those will probably make pretty good money if they know what they're doing. And so I'm looking more in the agricultural section, and in terms of emerging markets too. I think that there's opportunities there, but I still haven't honed in on what exactly I'm going to go after. But for now, I think silver, if you're getting it, in the 20s even, is okay for the long haul. If you come running into this industry a little bit later in the 40s and 50s, unless there's like a true currency crisis going on, you have to be aware of what you're doing, because you can get hurt. I saw people get hurt in 2011, come running into the market at the $40 range, and they've been probably licking their wounds ever since. Many of them may have sold it for a loss or are waiting to eventually break even to sell. So it's not to say, I think this next time that we do rise up in silver, though, I think we're going to be moving into the blow off phase for the precious metals. I think gold and silver are moving into their final phase for their ultimate bull market. And I consider the 21st century being the ultimate bull market, starting ever since the mid 90s, when they started lying to us about inflation. I mean, I did a blog today about it, and we give your viewers the title. It's called Gold Under NERP ? Negative Interest Rates versus Bullion. And it basically calls into question Trump's tweet and really shows you a chart using the shadow stats, government statistics, their real interest rates, what's really happening with inflation versus gold. And what you see is once the real inflation rate, once the real interest rate starts going below the inflation rate, you see gold prices just start immediately going into a rise, into a pattern where essentially they've been going up ever since. And the rise begins in early 2000, and obviously we've consolidated since 2011. But my argument is, if they go back towards zero or negative interest rates, you're going to see gold go into a higher price point than even 2011. It'll go past 1900, and we're going to move on to 2000s and even threaten 3000s or higher eventually. And so my belief is, look, they've been lying to us. We've been in negative interest rates really since the 1990s. People just don't know it. And when they finally do start to get it, I mean, that's the thing. It's been 2 decades of this crap. And people wonder why gold is so, it's gone up 6-fold since 2000. And that's depressed. That's a depressed. It should be much higher than that. If we were actually having a free market price in gold, you could argue that it could be $3,000-$4,000 pretty easy right now today. And so, in my mind, I just think that this is going to take some time to play out. There's going to be some crazy up and downs, so people kind of have to buckle in, because we're going to see stuff we never saw before. But ultimately, I think trust is the game, and when the masses start losing it, they're just going to come running into bullion. They're going to be so concerned about losing more of their purchasing power that they're going to really come in heavy. And that it doesn't take a whole lot of capital moving into gold, and especially into silver, for things to really start moving.
Gotcha. Now, for someone who's just like brand spanking new into silver stacking or gold stacking, what would be your advice to give them?
Sure. I did a blog called Top 10 Best Bullion Products to Buy for SD Bullion, and it basically showed the top 10 products that our customers purchase. And so it's not me telling them, hey, here's what you should buy because I'm telling you. No, it's what our customers buy. And I think when you first start out, it depends on where you live, and then secondly, you got to ask yourself, why are you interested in gold or silver? And so if you could just sit down and write down why are you interested in it, and look at what you wrote, like say you write down something 500 words, 1,000 words, try and figure out, is it based on, I want to keep what I'm saving? Is that the most important thing that's driving you, or is it driving you because you want to make gains? And if it's the latter, if you want to make gains, then you need to have probably majority silver in your portfolio. If it's the former, about you keeping your wealth, you probably want to have mostly gold, because gold is just less volatile, and it won't drop as much, and it won't rise as much as, say, silver will. So you kind of have to know that threshold for your own personal investing objectives. A lot of times it depends on your age too. Like younger people, they just love silver because they can wait it out. Older people, they don't have as much time, so they'll tend to buy gold because they don't have much time to cover losses or deal with the worry or the pressure of having to wait for decades for this thing to play out. Gold's going to stand strong because central banks are already buying it hand over fist, And it's probably going to have to be used to fix this crazy world we built, where we have to have negative interest rate policies and you have just record piles of debt. At some point, we have to come clean on it and just start writing this stuff down and defaulting on some of the things that we promised that we can't deliver on.
That was one of the best explanation I've ever heard.
No,
one
man,
of the best explanation. No lie, that was good. That was money right there. Yeah,
Thanks,
right.
man.
But that's pretty much all I have on my end. Is there anything else you want to add, James?
No, that's it. I think if people have interest in some of these topics, I'm a pretty nerdy dude. I get in the blog section at SD Bullion, and we write a lot about these topics that I think your listeners might have interest in. So just go to our website, sdbullion.com/blog, and you'll find some of my latest stuff there. And some of the topics we talked about today are there. And yeah, thanks for having me on, Eli. It's always good talking to you and your followers.
Hey, thank you so much, James, for coming on. Guys, thank you so much for watching. Make sure you guys hit that subscribe button if you guys are not subscribed already. Make sure you guys leave a comment down below. Let me know what your thoughts are. And also, make sure you guys hit that thumbs up. It helps out with the algorithm. Thank you guys so much. Have a beautiful day. And don't forget to always work and grind.